Hello traders, welcome to the ChartsEmpire Forex Trading Beginners course. This step-by-step Forex trading course is designed for those who are completely new to the world of Forex trading and for those searching for a reliable source to learn and then understand how to trade the Forex market. In this Forex trading course, you will learn about the basic trading skills needed to help you succeed in your Forex trading career from the beginners level to the advanced traders level. Don't forget, you can always use the timeline in the description of this video to skip to any focal point of interest in today's class. If you are more interested in learning simple and effective trading strategies, then make sure you subscribe to the channel, follow our online social media platforms, and then click on the notification bell on our channel so that you don't miss our upcoming trading strategies tutorials. Alternatively, you can visit our website at chartsempire.com to access the chronological sequences of our trading educational content. All right, with that being said, let's jump in and get started. Welcome back. So, what is the Forex market, or what is the FS market? The word Forex or FS simply means foreign exchange. FS, Forex or foreign exchange, deals with the world's currencies, while the word market simply means a set of social gatherings of potential sellers and buyers of a product and services. I hope with the combination of these two words, Forex and the market, you should have an idea of what the Forex market is all about as a beginner. Therefore, the Forex market is a global and decentralized market where the world's currencies are traded. Decentralized means ease of accessibility through a digitalized medium between traders. Fortunately, this market is the largest financial market in the world, with an over daily volume of 6.6 trillions of dollars transactions. At the time of production of this video, it is by far bigger than the stocks, cryptos, and any other financial market around the globe. The currencies in this market are nations' money. For more information about money, you can check the article, The History of Money, on our website. Link in the video's description. Chances are that you are new to the Forex market and you don't have an idea of what Forex trading is and how exactly it works. One feature you will quickly notice when trading currencies in the Forex market is that you trade them in pairs. These are also known as currency pairs. The trading of currency pairs in Forex means selling one currency and then buying another currency in return. The best example to illustrate this activity is when you are going on an international trip. You will need to buy the local currency of the country you are visiting using the currency of your home country. For example, if you live in England and then you are traveling to the United States, all you need to do is to buy the US dollar USD using the British pound sterling GBP. Therefore, this transaction will be represented in the symbol GBP/USD. This means you are exchanging your British pounds for American dollars. Another common medium to participate in the Forex market is when you make an international purchase of an item not listed in your local currency on the internet. For instance, when you shop on the USA Amazon website with a European bank card, your local bank has to convert your euro to USD before the purchase can be successful. This online transaction is another good example of Forex trading. Since Forex deals with money, so how can we make money trading money? Exchange rate change by the second, so the market is constantly in a flux. That is, the market is either moving in an upward direction or in a downward direction. These volatile ups and downs price swings brings about the exchange rates. These exchange rates are what create opportunities for investors and traders to make money in the market. Also, trading volume and transactions in the forex market are always affected by supply and demand. The higher the demand of a currency, the higher its price will move. Likewise, the lower the demand for a currency, the lower its price will move. Many other factors can affect the exchange rate in the FX market. Some of these factors are trading sessions, economic data, geopolitical factors. We will discuss these factors in the later study of this trading course. Therefore, to make money in the forex market, we have to buy when the exchange rate is down. That is, you buy when the value is low, and you sell when the exchange rate is up or when the value has gone up. This is where the oldest rule in the investment world is derived, and it states buy low and sell high. Remember, I stated earlier that investors and traders make money in the forex market through the changes in the exchange rate of currencies. Investors with huge capital can decide to trade in this market conventionally. That is, the buying, holding whenever there is a decrease in the exchange rate, and selling when there is an increase in the exchange rate. This could have made you develop the thought of the risk and stress involved in the conventional mode of buying physical cash or currencies. You need not to panic, because the type of buying and selling we are interested in as a traders do not refer to the conventional mode of buying physical cash or currencies. As a trader, we want to make money through the differences in the exchange rates in the market. This mode of investment is called speculation. This will therefore lead us to the participants in the forex market. The forex market is two-sided. A two-sided market is one where both the bid and the ask are coded. The bid price is the price a forex trader is willing to sell a currency pair, while the ask price is the price a trader is willing to buy a currency pair. The differences between the bid and ask price creates the spread. We will discuss spread in the later study of this trading course. These two sides are made up of variety of participants in the foreign exchange market. These range from the major players down to the minor players. The major players are commercial banks, hedge funds, insurance, and commercial companies, such as forex brokers. You can check the description of this video for the list of our recommended forex brokers. The minor players are small retail investors and beginners traders. The action of the central banks in the forex market is usually regarded as an intervention rather than a participation. The good news about the forex market is it never sleeps. This is because forex markets operate a 24 hours, 5-day business cycles that covers 3 major forex market sessions, which are the Asian session, the European session, and the US session. Right. This is all you need to know for now as a beginner in the forex market. Now it's time to ask you some questions. I am going to ask you 3 questions with enough time to think about each one. Share your answers in the comment section down below, and I will see how many I can correct. If I don't get to you, please help each other round and correct each other. Question 1. How do traders make money in the forex market? Question 2. What is the bid price in the forex market? Question 3. What are the trading sessions in the forex market? Question 4. Why do you want to trade Forex. In the next class, we will proceed further to learn more about the 3 trading sessions in the Forex market, the basic Forex terminology, how much do you need to start trading Forex, advantages of trading the Forex market, what are the essential Forex trading tools, how to start trading with a Forex broker, and how to become a professional Forex trader. I hope this tutorial was helpful. If it was, please do not forget to check other trading educational videos on this channel. Remember, the comment box is all yours. Feel free to ask us a question or suggest any topic you want us to treat in the next class. Like, share this video, and subscribe to the ChartsEmpire Trading Institute. We hope to see you in the next class. Peace.